Hello traders, this is Blake Morrow with ForexAnalytix, and this is the week ahead video for August 4th, 2019. We got a lot to talk about today. It's going to be kind of a big or busy video, and we're in the middle of summer, but volatility has obviously increased, so we have so much to talk about. So before I get started, I just want to mention that if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. You can see $1 for 10 days. Try it out. And when you try it out, make sure you download the mobile app. So this way you have all of our analysis, all of our updates right at your fingertips, even if you're on your mobile device and you're not in front of your desktop computer using our application there. Also, if you like this video, all right, make sure you listen to our weekly free webinars, the week ahead, or the weekly face webinars. You can register right down here. It's free. So I'm on it every morning, and so's the rest of our team. They pop in throughout the course of the week. Dale Pinkert also does a lot of great interviews with a lot of great traders, economists, folks that are in the industry that are on CNBC that you typically might only get a couple minutes with. You get 30 minutes with, and they're free for you. So make sure you do register down here at the bottom when you get an opportunity. Okay. All right. So let's talk about the markets. Oops. Let me go back to. Let me go backwards. Here we go. Let's talk about the markets, and let's talk about what we had last week. And this, by the way, this pop out right here is our data flash. This is where you can get live data as it's breaking. You can see the results, hear the results. I'm going to move it out of the way. Okay. Massive volatility in the markets on the at the end of the week last week. Well, actually, it started off with the ECB a week and a half ago, and then we've actually seen volatility slowly increase throughout the course of the week. And it really, at the end of the week, things got really exciting. So one of the things that you have to realize about like the euro dollar, even though the euro is really not going to be my focus right now, but if you are short euros, you have to be a little careful because we actually created a false breakdown below the 111 level, and we closed back above it. So that move down to the 127% extension of this last move higher, you can see it right here. It came down to 110. 110.25ish, and I think we came down to like 28 or I forget exactly what the low was, but it was really close to that. But we came back up above 111. So the risk here is if you're long dollars, it kind of set up a false breakout. I mean, you can see it on the dollar index. Let's take a look at the dollar index here. We had this false breakout above these highs. And that kind of, and you can see this green line right here, right? That breakout point. We had a false breakout above the highs, and now we're coming back down towards support. So 98, 97, 80 roughly is going to be support in the dollar index, and you can see here that we could retest channel support, or this already broken trend line way down here around 97. That is a risk if you're dealing with the dollar outright. Now, for those of you that trade the euro or you trade the cable, I think that's going to be something that you want to pay attention to is the dollar index. If you're trading the yen, that's a little bit different story. Now, I'm going to do a little bit of work myself on my charts. Our team updates these charts throughout the course of the week. Remember, if you're and every day, as far as the basic technical analysis, the candlestick analysis, you get intraday updates with basic technical analysis with these pairs. You can see throughout the course of the week, you'll get these intraday updates and charts come through when most of the times when those updates are happening. And you also get harmonic analysis, Elliott wave analysis every day from Gregor Horvat and Andre this analysis is available to you as a ForexAnalytix subscriber. However, I did not do the weekend analysis personally because I do the analysis throughout the trading week for basic technical. So the weekend, the team takes the helm and they put up their own charts, and it's great because obviously my views are very similar to the rest of our team. However, I wanted to do some drawing for you because I think what had transpired this week, or this last week, excuse me, is going to really play into this next week. So, and we will talk about the week ahead and what data is coming out and some of the pairs that might be affected. But I wanted to be able to do some drawing for you here, and that's why it's going to this video. I didn't want it to take a whole lot of time, so I wanted to make sure I got through this stuff. So let's talk about the S&P. First and foremost, one of the risks of the S&P is that we are back below. You can see this pink breakout point here. That's 2970 in the S&P. This was a upper trend line, and I did reference it last week as well. I was looking for an alert if we came back above those highs, but just didn't happen. Never happened. We came up against the resistance. We kept knocking our head up against there. Relative strength was divergent. We broke down. Obviously, you know the trade war between U.S. and China has heated up quite a bit. So therefore, the S&P really came under pressure. Obviously, it created a lot of volatility in FX, which we're going to talk about here in 1 second. But the false breakout in the S&P is a risk now for people that are long. Personally, if you're going to be looking to short S&Ps, or short equities, if you will, I would probably be looking at rallies back towards 27 or 2970, because I think that's going to provide you the best risk reward, to be on the short side. Because if you think about whatever trades you're making, if you're waiting for a short, you wait for a move back up to 2970, which isn't too far away. I mean, it's 50 S&P points, but in the grand scheme of things, it's not that big. We can end up being up there by Tuesday or Wednesday. You get a rally back to 2970, you could sell somewhere around there with stops up here, and targets way back down here. So the risk reward is much better on a bounce. Now, like anything, especially once trends start, whether it's a uptrend or a downtrend, in this case, obviously we're looking for the trend to kind of shift lower. We might not get a bounce, and that's the risk you take at this point, is that holy cow, you got to start chasing the market in directions, especially once it starts trending. I don't know if a new trend is developing, but I think the risk that stocks continue to sell off is quite high, based on the current environment that we're dealing with, especially with the U.S.-China trade negotiations really not going anywhere, and looks like it's worsening. So and is it is it all part of a master plan of the Trump administration ahead of the elections or not? I'm not too sure, but the rhetoric has picked up, and therefore, as traders in the markets, we have to start looking defensively. So, with the S&P coming under pressure, the question you have to ask yourself is, okay, what's going to be my best defense in the FX market, or what in the FX market is going to move the most? Now, next weekend, I am conducting a webinar. It's going to be hosted by Pepperstone Securities out of Australia. And if you follow me via Twitter, make sure you register for that webinar. If you can't be around, you can at least get the recording. I'm going to talk in depth about the S&P and relationships in the FX market to the S&P. And specifically, we'll be talking about the yen, but I'm also going to be talking about a few other things that I'm not going to mention here, because obviously I want you guys to listen in next week as well, because there are some things that I want you to think about, especially if equities have peaked or we're near highs, and we're starting a correction, which seasonally could be the case. But the one thing that we're going to talk about today is we're going to talk about the US dollar, Japanese yen, and then we're going to talk about some of the yen pairs associated with this move. Now, the US dollar, Japanese yen, I'm going to tell you personally, I am short the US dollar, Japanese yen. I was short on Friday. and I stayed short through the weekend. However, on Wednesday night, the dollar yen, it was Wednesday night, Thursday morning, if you're in Asia, the dollar yen spiked up to the 109 and change, and I started shorting it in Asian trade, which would have been Thursday morning, above, I think my cost average was 109.15. I got up the next morning, Thursday morning, and we dropped down to like 108.90, and I don't remember the specific price, but anyway, I took profits, and I thought I was a rock star because of this false breakout. Yeah, I didn't look so hot by the end of the day as we dropped all the way down to 107.50. Doesn't mean that I didn't trade it on the short side, but it's like I had really just cherry picked the high there in Asian trade. And as most of you know, for those of you that trade around the clock, kind of like I do, Asian trades are very notorious for being false moves. So, when we spiked up above this resistance, I myself was thinking, man, this is going to be, this is a great setup for a short, especially when, this was a 38% retracement here. You can see it here. So 38% retracement here. All we had to do is take out all the stops in Asian trade and then reverse it. And that's exactly what happened. And that's how I played it. I just didn't play it well. When you're, and this is a conversation that I've had with a lot of traders as of late, over the last few trading sessions, or the last week and a half, we are seeing a pickup in volatility, but most of us have been used to very low volatility for the last year, maybe even more. So because of that, we're conditioned to taking profits quickly. So yeah, if I've got a sizable position short the dollar yen and I'm up 30 pips overnight, the first thing in my mind is I'm going to take profits right here, because the last thing I want to do is have a 30 pip profit. It bounces 20 pips. I take a measly 10 pips, and then I'm frustrated again. So I'm up 30 pips, take profits, and then next thing you know, you get a 100 pip move right after that, or a 150 pip move right after that, and that's going to take some adjusting for those of us, especially those of us that have been trading FX just for the last year and a half. We have to get accustomed to higher periods of volatility. I do think that volatility is increasing, so therefore we're going to have to start looking for, hopefully, bigger ranges. And with bigger ranges, you have to, uh, um, uh, take that into account. So don't beat yourself up. I guess the point I'm trying to make is if you're like, man, these were some really big moves this last week, and I didn't capitalize on them as much as I should have. That's because we've been used to very tight ranges as of late, so it will be an adjustment period for most of us. Okay, so like I said, don't beat yourself up too bad. Now, going back to the dollar yen, one of the things that's really important about where we're currently at here, and let me get rid of that fib, is that we are approaching what I consider pretty key support. You can see that we've had this triangle developed. That spike low was in the beginning of January. It's like the 2nd of January. We spiked down here, and a lot of people didn't think it was significant at the time, those lows, when we traded down towards 104.50. But it's interesting because most people that I have, most of the bank reports that I read and analysis that I read, most people are looking at this as being really key support as we approach 106. And because of that, in that spike low, we have a pretty symmetrical triangle. Now, if you take the low from back in June and this high here that we posted, a couple of days ago, the 127% extension comes in right around 106, let's say roughly. And I don't have this magnetized right to the highs or lows, but you can see comes in right around 106, 106.10. So that's 127% extension, right? Now, if you look at that spike low from January 2nd, let me put this up here, and let me change the template. Okay, you'll notice that the 78% retracement comes in right around 106, 106 and a quarter, but say roughly right around the same price, right? This 106 and a quarter to 106. What I'm trying to point out here is this is going to be pretty significant support through here. What the takeaway from watching what I'm doing right now is a break below 106 is probably going to be fairly significant. And I'm looking at 106 to be very pivotal. If we get a daily close below 106, that probably means that things are accelerating from a risk off standpoint. One of the other things that you have to pay attention to, which is something that we don't follow at ForexAnalytix because it's a currency that's not traded by retail mostly, is the U.S. dollar renminbi, or the yuan, the Chinese yuan. If we break above the 7 in the Chinese yuan, remember this is a fixed rate by the PBOC. So if we are moving above 7, that means that China probably is gearing up for an acceleration of this trade war, or a prolonged period of U.S. China higher trade tensions. And what they'll do is they'll manage their currency by engineering a weaker Chinese yuan, and therefore a stronger US dollar. So if we see that exchange rate move above 7, which in my opinion looks like we are going to break out, then that means that the US dollar Japanese yen is probably moving below 106, and S&Ps are probably moving lower. Now, taking all that into account, there are other yen pairs that you should keep an eye on, especially with Brexit approaching, with Bojo or Boris Johnson at the helm. Looks like a hard Brexit is increasing. The risk of that is increasing. Watch the pound yen. We closed below these spike lows here at that 130.50 level. We could really start trading into the mid, like 120s in the guppy or the pound yen. Take a look at the euro yen. Okay, the euro yen closed below a major level of support. We closed below the 120 level. Now the 120 level was very significant from a lot of fib standpoints, but we also closed below that spike low around the around 119. I think Goldman Sachs is targeting 110 in the euro yen, but the euro yen does not look, on a weekly basis. Oops, I went the wrong direction here. On a weekly basis, does not look pretty. This is the Italian election low right here at 109. I could see the euro yen, so that means this is a real low. That euro yen could see 115 pretty easily, and those are levels that we haven't seen since 2017. But it's all doable, right? Let's take a look at the. Oh, by the way, the RBA and the RBNZ both meet this week. All right, that's the RBA meets on Monday night, Tuesday morning in New Zealand, or excuse me, in Australia, and then the RBNZ meets Tuesday night here in the U.S., but Wednesday morning in New Zealand. The RBA is expected to keep rates unchanged. The RBNZ is expected to cut. But take a look at their respective yen pairs. Look at the New Zealand yen. That's a massive breakdown. Massive breakdown. There's those spike lows again from January. I mean, we could really start extending down towards 68. Remember, things are accelerating in a bad way between the U.S. and China as far as trade talks. It's going the opposite direction that we need for global growth. One of the currencies that are going to be greatly affected would be the New Zealand currency, and then also the Australian currency, as they're very dependent on Chinese growth, continued Chinese growth. Well, if things are deteriorating, then the New Zealand dollar is probably going to come under pressure. So a break towards 68 in the New Zealand yen to 68 yen, that looks very realistic to me, especially if the RBNZ is more dovish. Take a look at the Aussie yen. Very ugly move at the end of last week. The spike lows, come down here towards 70 and a half. We could very easily trade below 70 on the Aussie yen. Remember, if the US dollar CNH is moving above 7, the US dollar Japanese yen is moving below 106, chances are the Aussie yen is breaking down below 70, and then we have that New Zealand yen probably breaking down as well. All right. Also, one other that you should take a look at is the Canadian yen. I mean, this is a pretty big reversal of this. There's this there's this really key trend line that came in here, right through here, never made it above it. We have this little ascending wedge, broke down pretty aggressively. I mean, the spike lows in the Canadian yen come all the way down towards 77.50. So there's a lot happening, and guys, I have more to really discuss, but I'm not going to do it on this video because it's already gone too long. But if you catch me Monday morning, okay, Monday morning on our free face webinar that you can register right here, right on our homepage. I'm going to be discussing, some of these emerging market currencies, and I'll discuss the Canadian obviously in more detail throughout the course of the week, because we do have Canadian jobs reports at the end of this next week. So just a couple other things that are happening this week. So we have, like I said, we have the RBA on Monday night. We also have New Zealand employment on Monday night here in the US. Tuesday morning, okay, will be the New Zealand employment, the RBA. Then we have the RBNZ, obviously Tuesday, night here, Wednesday morning in New Zealand. We have Chinese inflation data Thursday night, and then Friday we're going to have UK GDP, which could move the cable a little bit. And then also we have Canadian employment. So there's a lot happening this week. Keep a very close eye on equities. See how they respond at the opening, how they gap this weekend. But remember that 2970 in the S&P is going to be extremely important for the market in general. Okay. And guys and gals, if you like this video, make sure you click a thumbs up if you're watching us on YouTube. Make sure you subscribe to our channel so you don't miss any of our videos that we post, because we're posting throughout the course of the week all of the interviews, the free face webinar. If you've missed it, we'll post a recap or a recording of it. So thank you very much for your time. I'm glad you can listen in today. My name is Blake Morrow with ForexAnalytix, and make sure you try us out. Remember, $1 for 10 days. Doesn't get any better than that. Talk to you soon. Thanks.